Welcome to the Financial Compass e-learning series. This session will provide step-by-step instructions on how to capture required adjustments for Basel III capital ratios in Financial Compass. No manual adjustments are required for Compass to calculate these ratios, but you will have the ability to make any changes you need. Before we get started, here are a few things to consider as you use this tutorial. A presentation control bar will appear anytime you move your cursor to the bottom of the tutorial window. Click the play/pause button at the far left of this bar to stop the video at any time that you need some time to do something during the presentation. If you would like to work on your Compass plan as you view the tutorial, click the Restore Down button in the upper right-hand corner of the tutorial window. Then resize the tutorial window so that it covers about half of the horizontal area of your screen. If necessary, reposition the tutorial window to the upper right-hand corner of your screen by clicking and holding while your cursor is in the top bar of the tutorial window. Next, open Compass and then open the plan that you want to use. If necessary, click the Restore button in the upper right corner of the Compass window. Resize the Compass window to fit in the space to the left of the tutorial window. Also note that there's a Table of Contents button in the tutorial navigation bar. When you click this button, an interactive table of contents will appear on the left side of the tutorial window. You can select any topic in the table of contents and play back or move to the start of the section you want in the tutorial. To hide the table of contents, click the Table of Contents button. The table of contents makes it easy to repeat any section of the tutorial while you're watching it, or to come back later and revisit any specific section of the presentation that you'd like to review. Other information on this topic is available through a variety of resources. Part 1 of the Basel III Learning Series provides an overview of the changes in Compass that were made to accommodate Basel III. A link to that other session is available in the client area of PlanSmith's website or by email request to support@plansmith.com. Recordings of a two-part webinar on capital management, originally presented in December 2014 by PlanSmith's Advisory Services, are also available. Give us a call at 800-323-3281 for details on that. Information on Basel III changes can also be found in an FDIC webinar updated in June 2014 titled Regulatory Capital Interim Final Rule. You can address this as well as the complete regulation through a link shown on the screen or through the FDIC website. Today we will use Compass with a sample bank to show how to make some specific adjustments in the Basel III ratio calculations. These adjustments serve two purposes. First, you can adjust Compass to account for all the detailed requirements that change with the Basel III regulation. And second, you can reconcile ratio components or results in your Compass report to the call report. We'll look at examples of three different ways that Compass can be changed to include calculation refinements required by Basel III. First, we'll show how property settings of certain capital accounts can be changed so that capital is included in the appropriate Basel III capital type. Second, we'll see how risk weights on asset accounts can handle the new complexities required by Basel III. And finally, we'll look at how adjustment accounts can be added to include any other data needed for the ratio calculations. But first, let's start with a quick recap of how Compass calculates these Basel III ratios. A new section has been automatically generated near the bottom of the Compass chart of accounts. It includes both capital categories and accounts. The new accounts have blue folders. They're automatically calculated by Compass every time you compute the plan. Then all of the capital ratios are calculated from a selection of totals from the new category level gray folders. These gray folders include the blue accounts plus any adjustment accounts that you add yourself. The accounts outlined here in orange are examples of adjustment accounts. Now these were all manually added to the chart by our sample bank, and they may not be needed by your bank. In fact, every bank is different. You can add as many different adjustment accounts as you want in any section of our chart of accounts. These adjustments will only impact the ratios and reports, but will not change your balance sheet, your income statement, or any other Compass reports or results. Later we'll show how to create an adjustment account and how to enter that information. But first, let's review how Compass uses these new gray folders in the off-balance sheet section of the chart of accounts to calculate the capital ratios. All Basel III capital ratios are based on totals in these gray folders. This chart shows which folders are used in each of the four ratios. Now that we know how the ratios are built, let's look at some specific ways that we can adjust Compass to handle some of the new rules effective with Basel III. First, we'll look at some of the examples of changing Compass to comply with detailed Basel III requirements. Our first example will show how property settings in certain parts of the capital section can be adjusted to change the classification. Now, there's been a lot of discussion of Basel III requirement that banks make a one-time election of the treatment of AOCI. Now, Sample Bank decided not to opt out of including AOCI in capital. The good news for them is that their AOCI consists entirely of just one thing: it's unrealized gain or loss on securities. Now, prior to March 31st, 2015, this account was excluded from capital ratio calculations. But banks who do not opt out will want Compass to include unrealized gain or loss in capital. Technically, it's included in a new component of Tier 1 capital called Common Equity Tier 1 Capital. Here's how we make that change in Compass. This issue just requires a simple change in property settings for a capital account. While we're in the projections area of Compass, scroll to the capital section of the balance sheet. Not the off-balance sheet at the area, but the capital section, which is near the middle of the chart. Right-click on the account that includes AOCI. Sample Bank has it named Unreal Gain/Loss Securities. Select Account Wizard. Click the Next button, then use the drop-down to change the capital class from Exclude from Capital to CET1. Click the Next button again, then OK on the Account Setup Complete box. Now, important, don't forget to compute the plan. As soon as you do that, the total in the Common Equity Tier 1 base account will include that AOCI item. If your bank opts out of the AOCI election and does not have any unusual types of stocks or subordinated debt, you probably won't need to make any changes in your capital class properties that are already in your Compass database. But if your Compass capital accounts do not balance to the call report, or if you have a more complex capital structure, adjusting the capital classifications is often the easy solution. Any accounts that fall within these folders, or the ones highlighted on your screen, can be customized. Use the Account Wizard to select between CET1, Tier 2, or Excluded from Capital. It's a good idea to review the settings for all the accounts in these 5 folders, though, because the capital category rules did change with Basel III. So let's take a look at adjusting risk weights for certain asset accounts. This is necessary because Basel III imposed new risk weights on many types of assets and additional types on off-balance sheet exposures that will need to be included in the risk-weighted assets. There are 3 different ways to make risk weight adjustments in Compass. Remember that your Compass database already includes risk weights on each account, so you only need to make adjustments if your bank has assets that either have different risk rates because of Basel III or they're new items off the balance sheet that need to be included for the same reason. The FDIC webinar that I mentioned in the introduction, by the way, has a lot of information on that. Now, the easiest way to change risk weights is to use the Account Wizard or Edit Properties on an individual account in the Assets section of the Compass chart of accounts. For example, our sample bank has several accounts for non-accrual loans. Basel III requires a risk weight of 150% for non-accruals, as well as loans that are more than 90 days past due and still accruing. So let's change the risk weights on the bank's 3 non-accrual accounts from the pre-Basel III risk weight of 100% to the new risk weight of 150%. Click the Projections button on the Compass main menu. Scroll down to the first asset account you want to change. In this case, it's non-accrual commercial RE. Right-click on that account name and choose either Account Wizard or Edit Properties. We'll use the Account Wizard method for the first account. Click the Next button on the Account Wizard until you reach the box asking for RBC, or risk-based capital factor. Clicking Next will retain the settings that already exist for this account for items you're not changing. Now when you see the RBC box, click the drop down to the right of the current RBC percentage and choose Custom. Click Next and you'll get another RBC box that will allow you to type in the 150 that you want. And then keep clicking Next until the wizard is completed. Now let's right-click the second non-accrual account, and this time we'll use the Edit Properties method. Click the drop-down to the right of the existing risk-based capital factor and select Custom. Enter 150 in the Custom RBC factor box and then click the OK button. Using the Edit Properties method, as you can see, is a bit quicker than the wizard, but either way will be fine. And of course the wizard allows you the opportunity to review all the account settings as you're working through it. You can choose either method for the third non-accrual account and then you're done. Now the next way to change risk weights is to use the Custom by Month choice from the Account Wizard or Edit Properties on an individual asset account in Compass. For example, Sample Bank has a mix of both first and second mortgages in a single category called RE 1 to 4 Family Fix. The problem is that the risk rate for first mortgages is 50%, but the risk weight for junior mortgages is 100%. Currently, the bank has about half of this loan category in junior mortgages, so if you did the weighted average of those two risk weights, you end up with an average risk rate of 75%. However, the bank is no longer making these fixed-rate junior mortgages, and so the loans on the books that are junior mortgages actually all mature by December 2017. Now that means that the risk rate in this category will gradually decrease from 75 to 50% at the time when there are only first mortgages remaining in the portfolio. Let's see how we can configure Compass to handle this transition. Right-click on the account name, in this case it's RE 1 to 4 Family Fixed, and we could choose either Account Wizard or Edit Properties, but again Edit Properties is a bit quicker, so we'll choose that here. Click the drop-down to the right of the existing risk-based capital factor and select Custom by Month. Next, make sure that there's a number other than 0 in the Custom RBC factor box. In our example, I would recommend the current risk weight of 75%. It doesn't really matter because you can always change it, but choose that and then click OK. Notice that when we do that, a new tab called RBC Factor appears on the account screen. Click this new tab and you'll see that all the months in the list have a risk weight that we just entered, that's 75%. So what we want to do now is ramp this 75% down to 50% by December 2017. So we click the first 75 next to April 2015 and drag down through December 2017. Next, right-click anywhere in that highlighted area and choose Quick Edit from the box that will appear. In the Quick Edit box, choose Ramp to Value and enter 50 in the Ramp to box. Then click OK. This will give us an even decline to 50% by December 2017. But remember, we still have 2018 to deal with, and we need to adjust the risk weights for that down from 75. So highlight the amounts next to January 2018 through the end of your projections. Right-click the highlighted area, choose Quick Edit, choose Constant if it's not already selected, and just type 50 in the Constant box, then click OK. It's great that we could use the Quick Edit shortcut for our particular example, but you know it's also okay just to type in the risk weights each month if you find that easier, or if you have risk weights that don't follow any particular pattern in your future projection. Now there are a number of other risk weights, however, that are introduced by Basel III that are best handled with an adjustment account. So let's take a look at an example of how to use the last of these three ways of changing Compass to include these Basel III requirements. That's the adjustment accounts, and see how that works. Basel III requires additions to risk-weighted assets for a number of off-balance sheet exposures, and these include things like letters of credit and loan commitments, certain option or hedge agreements, and a lot of banks will end up needing to do this. The regulation specifies a number of different conversion factors. Now they're like risk weights, but the addition to risk-weighted assets is calculated by multiplying the amount of the contract or notational value times the conversion factor. It's easy to use an adjustment account to enter the addition to risk-weighted assets that Basel III requires. Let's see how. Sample Bank has a total of $12 million in loan commitments with an original maturity of 1 year or less. The Basel III conversion factor for that type of exposure is 20%. To register that, we go to the projections area in Financial Compass and scroll down to the bottom of the chart of accounts. Compass does not allow any edits to the folder totals of the blue accounts, so we'll add a separate adjustment account in this total risk-weighted assets gray folder area. Simply right-click on the folder name. Select Add Account. The account wizard will then ask you for an account name. In this case, we could call it something like RW Commitments Less Than 1 Year, but any other name you prefer is just fine. Doesn't really matter. Then next, click OK. We're done. Our new adjustment account will appear in the chart. Now we could click that description and edit projected amounts, but remember the adjustment that we want here is for a month that already happened, not in our projections. To do that type of entry, we click on Update Financial. That's that magnifying glass with a $sign in it on our top menu. Click that button and make sure that the month and year that appears in the update box are the correct month. In this case, we're looking for March 2015. You will see that our new adjustment account already appears in the right hand of the screen. Just enter the amount in that box for the risk weight. In this case, it's the total exposure amount of $12 million times the 20% conversion factor, and since all balance sheet items are in thousands in Compass, that means we'll enter 240 in that box. Make sure that once you do that, you click the Save Data button to record your change, and when you do that, a data save confirmation will appear. Click OK on that box, and then a Compute a Plan box will appear. Click OK on that, and that will complete the process. Now, if you wanted to project amounts in the future as well as your most recent or other historical balance sheet, you can then return to the off-balance sheet area in Projections and enter the future amounts just like you would in any other account. That's all there is to it. Now, your bank may have a number of other types of off-balance sheet exposures, so we recommend that you review the Basel III rules to see if there are any other conversion factors and categories that you need to follow this procedure for. Well, let's move on to the second reason you may want to adjust Compass for Basel III. That is because that you want to get an exact match between the numbers in your call report and the numbers in Compass. By the way, the call report references that follow are for call reports that are dated March 31st, 2015 and later. The call report sections and line numbers are different than the earlier call report dates, again because of the Basel III changes. Now, we've got screen notes here that indicate where this data was located on earlier call reports. But let's just start at the top of the Compass chart and we'll see where these amounts appear in the call report. The first folder is total assets for the leverage ratio. It corresponds to line item 39 on Schedule RC-R, Part 1. Well, it looks like there's a small problem here. The amount in the call report is $354,727, but the amount in Compass is $354,566. Now, this is a small difference when it comes to calculating ratios, and it would have little impact on the final results. But differences like this happen a lot because call report software may use different rounding or averaging rules than Compass uses, and there can be other small things going on. So you have a choice. You can ignore the difference. But if you want to adjust Compass to get the exact call report total, it's easy to do that with an adjustment account. To do that, we go back to the Projections area in Financial Compass and scroll to the bottom of the chart of accounts. Right-click Total Assets for the Leverage Ratio and select Add Account. The account wizard will ask for an account name. In this case, we'll call it Rounding Adjustment, or any other name that you'd prefer. Then click Next, then OK when the Account Setup Complete message appears. Our new adjustment account will appear in the chart, and if we want to adjust history, though, we'll have to go to the Update Financial area. Again, make sure the month and year and the update for box are correct. And our new adjustment account is right there on the screen, just close to the other one we created earlier. What we want to enter here is the difference between the call report amount and the Compass amount. In our example, that's 161. When we've entered that amount, click Save Data and record your change. Then click OK on the Data Save box, click OK again on the next box, and then Compute in the Plan Compute box. After we've done that, we can return to the projection section of Compass and scroll down to the bottom of the chart. Click on the Assets for Leverage Ratio folder and verify that we've got the corrected amount that equals the call report. Well, let's move on to the next item we could check. The next gray folder in the new capital section is Total Risk-Weighted Assets. This Compass folder total corresponds to the line item 27 in Call Report Schedule RC-R Part 2, titled Risk-Weighted Assets Before Deductions. We don't recommend that you try to reconcile to the Call Report Item 30, which is called Total Risk-Weighted Assets, because Compass includes the amount on that line 28, the excess allowance for loan and lease losses, in its ratios, but it does not include that component in the gray folder total that you see for total risk-weighted assets. Also, if your bank is one of those few that are reporting an amount on Call Report line item 29, Allocated Transfer Risk Reserve, you might need to create an adjustment account for that if it's not already reported in the capital section of Compass. All right, let's move on now to reconciling the capital levels. The next Compass gray folder is Total Tier 1 Capital. It corresponds to line item 26 in Schedule RC-R, Part 1, Tier 1 Capital. Next, we go to Common Equity Tier 1 Capital. In Compass, that ties out to line 19 on Schedule RC-R, Part 1. However, this Common Equity Tier 1 Capital for most banks was not in your call report at all prior to 3/31/15. Now, another hint when you're looking at this call report, if your bank has some amounts on lines 13 through 18 or lines 20 through 25, there's a good chance that you might need to change a capital class or create an adjustment account for items in these types of categories. Next, we go to Tier 2 Capital. In Compass, that ties out to line 34 on Schedule RC-R, Part 1. Of course, we're in balance here, so we're in good shape. Another great place to look for information is the Capital Adequacy Report. It can also help you identify differences. This report has been expanded to help you review every component of the Basel III ratios. It provides account level detail, including individual risk ratings, and it shows all of the individual adjustment accounts that have been created. Let's look at how to compare the ratios in the Capital Adequacy Report to the call report. The Capital Adequacy Report is quite detailed, and it's usually several pages long, so the ratios are all the way down at the bottom of the report on the last page. Well, the news here is good. All of our ratios tie out to the call report. Frankly, in real life, there'll often be small differences because of rounding. If the differences are large, then there may be differences in the components that we reviewed earlier in the presentation, so you might want to start there. This revised capital section provides quite a bit of detail, so that'll help you look for the specific line items that need to be reflected in Compass. Well, let's conclude today's presentation with a quick review. Compass automatically does everything possible to calculate the Basel III ratios. However, some banks will want to make adjustments for two reasons. You may want to make adjustments to pick up details that are not available in your general ledger system or Compass chart of accounts, or to pick up changes made with the Basel III rules. And you may also want to make adjustments to get an exact match with line items or the ratios to reconcile to your call report. Compass provides three different ways to make these adjustments. You have the choice. You can change the capital class property on accounts for a number of balance sheet liabilities and capital categories and redirect these balances to a different level of capital appropriate for Basel III. You can fine-tune risk weights in a variety of ways to capture any of the new requirements for Basel III. And you can create adjustment accounts in any of the ratio component folders that are located in the off-balance sheet portion of Compass chart of accounts. We're confident that Compass gives you everything you need to help manage your financial institution's capital in compliance with the Basel III rules regulatory standard. But please don't hesitate to call us if you have a question or suggestion, anything we can do to help. You can reach Compass Support at 800-323-3281 or by email at support@plansmith.com. I want to thank you for taking the time to view this presentation and most of all for being a PlanSmith client.